to Nigeria now, and we have our special guest with us. Dangote Cement, revenue 38% growth there in the second quarter of the year. Gross profit 324 billion, 43% growth. We did see pre-tax profit drop by 14%, profit after tax up 4%. And who better to discuss that with us than Mr. Gbenga Fapohunda, who is the Group Chief Financial Officer of Dangote Cement. You are very welcome, sir. Thank you so much for joining us, and happy Friday.
Thank you, Dewey. Thank you.
So, yes, kicking things off, I guess your revenue drivers with respect to how you posted this number. Let's talk about your revenue triggers. Was it sales and volumes?
Oh,
prices and volumes, rather. Yeah.
Thank you for that. It's actually a combination of about 4 or 5 factors, and I would walk you through them.
Please,
one by
please.
one.
That's why we have you here.
You're on point. One of them is volume. We actually grew volume. Volume was one of the key drivers, particularly in our businesses outside of Nigeria and Pan-Africa. I mean, volume grew quarter on quarter by about 14%, which was really good. The next key factor is our product mix. So basically, what management strategically did was to sell more of our high margin products and less of our low margin products.
That makes sense.
That really helped as well.
Yeah.
Then the other part is the devaluation of the Naira. Even though it has its own negative, from a revenue perspective, it had its own positive. Okay. So I'll give you an example. We have, if I generate $1 revenue in my businesses out of Nigeria, if I want to convert it into Naira, previously I was converting at 465, and now I convert at 750
or so. Right.
So we got some impact from that as well. And also, you talked on price increase. We had some price increases as well in some of our key markets outside of Nigeria, like Ethiopia, like Zambia. So I mean, it's a combination of factors that led to the good story we have around
revenue. See, this is why we have the chief financial officers and managing directors on the show to break down the numbers for us. All right, your cost of goods sold, though, did see a jump of about 30% to 219 billion. And whenever we talk to businesses in Nigeria, there is always this conversation around the cost of doing business. So take us to what was the results of, particularly for the jump in there.
Okay, basically, it's a couple of factors as well, and I'll walk us through about 3 or 4 key factors that drove it. The first one is I spoke about the volume growth.
Yeah.
The way it works is the more you produce, the more power you consume.
Aha.
And power is a key part of our business. So that's one factor that affected the increase in cost of production. The second factor that affected it as well is our cost of coal. So cost of coal actually increased as well significantly. I'll give you an example, and this is across all our major markets. I'll give you an example like Nigeria. This time last year, maybe early of last year, we were buying local coal, at about 14,000 naira per ton. As at now, I'm buying at about 28,000 naira per ton.
Oh my goodness!
So
that's a 100% increase.
So you see a lot of hikes in this. Gas is another form of power that actually is very key to our business. So basically, I buy gas. I am building dollars by paying Naira.
Wow.
So now, before now, dollar was 465.
Right.
Now, dollar is now 756. So I'm now paying more Naira for the dollar.
Right.
So that's another impact we have. Luckily, it's not a full quarter impact because we had this huge impact in June. So that really helped us. But for us as management, what is more important is what are we doing about it?
Aha.
So for us, we've invested heavily in what we call alternative fuel. Alternative fuel is mainly basically biomass. So I'm using palm kernel shell to power my plant instead of expensive gas, expensive coal.
Yes.
I'm using rice husk to power my plant instead of using expensive diesel. So we've invested heavily in this and we've gotten serious mileage. We call it thermal substitution.
Okay.
So it has really helped. We've doubled our investment in this even before this. So we expect to see more benefits as the year rolls out.
I've learned a new phrase, thermal substitution. Is that what you called it? Thank you. See, you've educated everybody here now. I have to talk to you about your selling and distribution expenses, particularly haulage costs. I guess that is what moving the cement up and down. 70 billion, a 12% climb. Well, what's the story with the haulage expenses?
So you're very correct. What has happened is this is actually being driven by high prices of diesel. So 1 year ago, before the Russian-Ukraine war, AGO was being sold at 300 price levels. As at today, it's about 650, 700. So it has really jumped, and it's across the group. But the next thing is, what are we doing to ensure we deliver value for our shareholders? What are we doing to ensure that we can't reduce it, minimize this impact? So what the business has been doing over the last couple of years is investing heavily in gas-powered trucks, which are cheaper.
Like CNG?
CNG, exactly CNG.
Okay.
Compressed natural gas. So
Yeah.
this crashes your cost significantly and you get a lot of financial benefit.
Yeah.
That's on one hand from a financial perspective. But from a non-financial perspective, which is much more important to the business, it reduces our carbon footprint. So it's a win-win for us as a business.
You're net zero compliance.
Ultimately, that's the target. We hope to get there in the nearest future.
But is it, I mean, the conversion from fuel to wait, are you buying a CNG truck or you're converting from fuel to CNG? Are you doing both or is it?
It's both. So
Okay.
it's a combination. The end game is actually to go full CNG power truck.
Yeah.
That's the end game. But currently, what we have about 1,000 currently. Arguably, that's probably the largest in West Africa.
Wow.
Basically, so we currently have trucks that do diesel and gas.
Yeah.
So when gas finishes, we switch to diesel, and there's some technology behind it, but that's the principle. And we have over 1,000 of them, and we are investing continuously. We expect to get to where we want to get, which will affect both we'll achieve our financial objectives and our non-financial objective, which is reducing our carbon footprint.
Fantastic breakdown. But I have to ask you, you see, again, businesses have to make all these investments to make, to save costs and to make life easier for themselves. A lot of goods move by road, up to 90-something%. What would happen if we had an expansive rail network? Would that make your life easier? Would that reduce costs for you? If we talk about diversifying transportation in Nigeria.
I agree with you totally. I mean, having a more efficient rail network system, having a more efficient transport network system, it would really help. It would help us from both an economies of scale and an economies of scope. And to see our cost of production reducing, and possibly any benefit we get from that, we can actually transfer it to our customers, who are our greatest assets. Basically, our greatest assets are not our trucks, are not our factories.
Yes.
It's our people.
Yeah.
And our people are mainly our customers and our staff. So you're very right on that. You're on point on that. It would really make life easier. And to be frank, in our different businesses across Africa, we've seen a lot of improvements in the last decade from African governments. However, there's still a significant gap that needs to be addressed.
And so that gap, you see, the thing is that it almost seems as if businesses in Nigeria and individuals are almost governments on their own because they have to make all these provisions.
Yeah.
But so the cost of all these investments, from the trucks, the conversion to also the thermal switching, I mean, does that not add up? Are you able to make provisions for those investments to make these conversions that can lower your cost in the end?
Yeah, so I mean, the end game is, on the long run, we're going to have significant savings on that.
Right.
You can imagine, hypothetically, the cost of CNG is about 1/3 of cost of AGO.
Yeah.
So on the long run, even if you make this investment over the next 1, 2, 3 years, your payback period, you're going to get back your money.
Right.
So it really helps in terms of financial. Yeah, it's a very wise investment.
Gotcha. Thank you for all these plans. Finance costs. Have to ask you about that in terms of the interest income, interest expense, whether, loans, because I see your interest income did fall by 51% to 5.7 billion. Interest expense, that jumped almost 70% to 26. So what's the mix with your finance costs and so on?
Okay, I'll take it from two different perspectives.
Please.
So the finance income, first of all. So it was a deliberate strategy for us to actually reduce our part liquidate our short-term investments.
Okay.
And put that in businesses that have higher margins. So I have short-term investment at 9-10%, while I have another business I can put into at 35% EBITDA margins. So that's what drove that. In terms of the finance expense, so what has happened over time is we've actually raised a lot of commercial papers. These are debt instruments,
right,
and bonds. So these are the interest coming from them, which we've invested strategically within the business.
Okay.
So those are the two key drivers.
Those two key drivers. Thank you for that. So we have to get to the big one now. The
elephant in the room, I guess.
Yeah, indeed. The FX hits, which was 100 billion naira. My goodness. 382% climb there. Talk us through this. I mean, this is not just you, because we're going to talk about other industries as well. But yes, so, it seems pretty straightforward, but break it down for us in case anybody is wondering. I
was so sure you're going to ask that question. And thank you for that. Basically, this FX loss is coming from the devaluation of the naira in Nigeria, in our Nigerian business particularly. So we saw a 63% devaluation from 465 naira to $1 levels to about 756 naira to $1 levels. So, and we have foreign dollar obligations that we use to buy spare parts for a factory, AGU, and the likes. So the impact of that, so I have a loan, let's say I have $1 loan that was being priced at 465. All of a sudden, devaluation came. That same $1 loan, I have to price it at 756.
Wow.
So it came, and we had to take the impact. But irrespective of that as well, our Q2 profit was still higher in terms of profit after tax was still higher than last year.
Yeah.
Our H1 profits was still higher than H1 of last year. I mean, that just talks about the resilience of the business and the good fundamentals around it. So.
Now, if you're looking ahead, because here's the thing. Now, in what a number of executives are saying, because it's not just you, Nestle, Nigerian breweries, MTN, Guinness, I mean, across the sector, there was FX hits left and right. But what executives are saying is that long term, with the decisions that the administration has made, hopefully there's a long-term benefit that hopefully there's more FX that comes in. Do you have an FX outlook? I mean, as far as making provisions for what is down the line, how do you see things working on the FX front in Nigeria?
Okay, I'll take it from two perspectives. I'll take it from a
Take
Dangote
it from 5 or 6, as many as you want.
I'll take it from a government perspective.
Okay.
From a Dangote perspective, we are working towards having an FX neutral environment.
Okay, explain what does that mean? What do you mean by FX neutral?
Okay, so basically I'm doing a lot of exports, and I'm investing in doing more. Currently, I export to Niger Republic. Currently, I export to Ghana. Currently, I export to Congo. I intend to do more of that so that I can have a lot of FX to mitigate those impacts and use that to buy my input materials like spare parts and like. So that's a strategy from a Dangote perspective. From a government perspective, personally, not speaking on behalf of the company,
understood.
I think the government is going in the right direction. I think ultimately, when we get it right with the floating of the currency, I think availability will be there once we get it right at the end of the tunnel. It's going to be a turbulent journey, but at the end of the tunnel, I think it's going to be more beneficial to businesses because you can predict what your prices will be and it will be more available.
Right.
So you can include that in your pricing, in your cost reduction initiatives to achieve a certain goal that's set by the business. So.
When a lot of people, and maybe you can help us, clear some thinking here. When a lot of people just hear the name Dangote, they think all this money is available somewhere for the businesses to do whatever they want. Do you benefit from foreign direct investment? If there's more investment coming into Nigeria, would that somehow flow into your operations? Because since when everybody says we need FDI to come in, and there are different industries that would benefit, would that benefit you as well?
Definitely it will.
Yeah?
I mean, in terms of we've had sessions with foreign investors, multinational investor companies, and clearly Dangote is one of the companies of choice. I mean, this is the largest company in West Africa, as it were. So it's something that will benefit us. It's something that will help with the pricing of our shares. It's something that will also make Forex available for us in the environment. Because FDI money is coming into the country. It's huge, it's massive, and it helps with liquidity, which helps with demand and supply and pricing. Now,
you mentioned a number of countries that you're exporting to. Is Africa the main, is dominance or expanding your footprint across the African continent? Is that the end game, or are you looking possibly outside?
So the immediate term is to conquer Africa.
I like that.
And make Africa sustainable, self-sufficient in terms of cement production and consumption.
Right.
Then we can go outside of Africa if the economic situation warrants that is available for that. But currently our focus is Africa.
Now, as far as there is competition, how do you plan to stay ahead of the competition? Because it's high barriers to entry, highly capital intensive competitive business, and its competition is fierce. So but you're still, I guess, a market share leader. How are you going to keep that up?
Yeah, so I mean, basically, I will answer that with just one question.
No, you can do two.
So we can actually,
Okay.
you can actually have thoughts around that.
Yes, please.
At Dangote Cement, as I said earlier on, our focus is just on one thing: our customers.
Yeah.
People. So by the time your focus is on your people, you're looking out for their best interest. You're doing research to find out what they want, what is best for them. Is it pricing? Is it quality? Is it safety? When you're customer focused, you're able to actually cover all the key brackets that happen. If you do that, you win customers to your side ultimately.
you maintain
yes.
leadership.
And that's what the board, that's what the chairman, that's what the MD and the management team of Dangote speaks about. Every time I'm with the chairman, every time I'm with the board, that's all they speak about. What does my customer benefit? So when you're talking about price increase, you're talking about this, what is it you need for my customer? That's the end game for us as DCP.
The free trade zone, the ports, the Lekki ports, as far as your exports, how are you going to be taking advantage of that in terms of your sending your goods out to the rest of the continent?
It's part of the whole export strategy, which we've started investing in. I mean, we've been doing export for a while, and we intend to double that for the next foreseeable future, actually.
I do want to squeeze one more question here. The whole talk around affordable housing, and you talked about having to import materials. Now, cement, of course, is one of the main materials needed there. Can Nigeria meet her affordable housing goals, making cheaper homes for everyday citizens, considering what we have to? As far as the importation of materials, do you think that's possible?
I think that's possible. If I take 10, 15 years ago, Nigeria was importing cement.
Right.
I'll talk about 5, 7 years ago, we became self-sufficient.
Yes.
Currently, we're net exporter of cement.
Right.
So we just need government to provide the enabling environment for this mass production of houses to take place. From a Dangote perspective, we have the capacity. So currently, we have slight excess capacity to take care of those needs. Our belief as Dangote Cement is the housing and cement industry is going to grow in the long run. So how do we prepare for that long run? You don't build a cement plant in 6 months, 2 months. You build it over 4 years. So how do you prepare for the next 10 years, next 15 years? So to summarize your question, I think it is doable. I think we can achieve it, and I think we have the structure on ground to achieve that.
Excellent. So what's your for H2 and beyond? What's your outlook for? I guess actually before the outlook. Wait, so you see more questions keep popping in my head.
That's fine. Ask all your questions.
For you. Guests like you are our favorite. Infrastructure plans of the government. The president has talked about an infrastructure fund. Nigeria has massive infrastructure needs, and of course, that is the reason why many analysts have positive outlooks for the industrial sector and players like yourself, and of course, Boa Cement and Lafarge and so on, the players there. So is that another, as far as what's your outlook for the infrastructure plans of the nation and how that the players in the sector can key in there?
No, I think it's about, what they call luck, is about opportunity meeting preparedness.
Yeah.
And where we sit is how do we prepare for this opportunity which we see. And for us, it's about being ready in terms of capacity availability, in terms of having the customers, in terms of working closely with government and all stakeholders to achieve that increased availability. So for us, as an example, we plan to invest in Itori, which would give us another 6 million tons, which makes us tap into those growth we expect to see in the market. And as a nation, we're able to achieve our objective.
Yeah. Okay, now I can go back to the question that you're about to answer. Finally, only a minute to go, your outlook for, I guess, the sector, for the company going forward.
So for us, I think it's a very positive outlook. We think it's really encouraging. We think we are going to be able to achieve our numbers and meet our expectations. Our strategies are around 2 key factors, and the first one is basically on volume growth. I mean, we've invested and we've supported this volume growth objective largely in all our key markets: Nigeria, Ethiopia, Senegal, Tanzania. It's a growth story for us, and we intend to keep investing and supporting this. The second part of it is cost reduction for us. I mean, I've given a hint about the cost reduction effort that we are taking and we continue to take. Within the business, we call it build momentum. Build momentum is to say, how do we reduce cost? How do we reduce cost and create efficiencies? So I've spoken about the alternative fuel, whereby I'm using more of corn husk, more of palm kernel shell to power my plants instead of using. So we're investing a lot in that, and that's going to crush our cost. I spoke about using CNG as well. That is going to cut our cost. That is just a tip of the iceberg. So we have a whole lot of cost reduction initiatives that we intend to take to actually achieve our objective of this good future we see for the next half of the year.
We'll end on that note. You said it with a smile. Gbenga Fapohunda, the Group Chief Financial Officer for Dangote Cement, thank you so much for joining us to talk about your numbers. Really, and we'll have you back for H2 and end of the year.
I'll be there.
Thank you so much.
Appreciate it.